So, what's exactly happening in this China Evergrande nonsense? I think for those of you who have been following the market quite closely, you guys always know that a lot of reporters or a lot of media outlets like to credit or like to attribute a lot of things in hindsight. So they say that, oh, it's because of the debt ceiling, oh, because of the inflation rate, oh, because of the Fed tapering, oh, because of the Evergrande collapse, oh, because there's a contingent, oh, because another property developer just basically default. So in essence, I think there's a lot of noise in the market because ultimately facts tell but emotions sell. So essentially, if you were to really look at a lot of all these media outlets, all of them are just painting a very big picture. Oh, a bear market is gonna come. The largest drop since January this year. Blah, blah, blah. Whatever kind of headlines or clickbaity titles they can come up with. So of course, out of the entire slew of problems that I mentioned previously, I'm in no position to say that I'm a very good macroeconomics kind of guy, but I really just wanted to dig deeper and understand this China Evergrande thing and what exactly is playing out and what is the crisis that is making markets or investors worrying about it. So with that in mind, please remember to smash the like button to boost my ego. And with that, let's look into this entire crisis worrying the markets. So essentially, China Evergrande isn't something new. This thing has been playing out for a good 1 month or so already. And a lot of things have been kind of priced in. The entire Chinese market, especially the Hang Seng Index and a lot of adjacent companies, especially financial institutions and insurance companies, have been taking a beating. And for those of you who are Ping An shareholders, I wish that you are Ping An, or in essence, it means safe. I think Ping An right now is at a very attractive valuation. I'm still doing my due diligence, so this is not financial advice. Please go and do your own deep dive first. I haven't started a position yet, but I'm extremely attracted by its current valuation. So I'll do an update if I actually do buy into the stock and probably do some quick analysis. So of course, let's look into this development of China Evergrande. So essentially, the world stock and bond market are closely watching China Evergrande Group, a Chinese property developer that hasn't made payment on some of its debt. If not resolved, it threatened to become the largest debt default by a company in Asia, which could jolt investor confidence across market globally. Beijing seems reluctant to bail out the company, but is taking steps to limit the damage. I think I came across this very recent commentary, so I'd just like to focus and emphasize on 3 main points in this current problem. So firstly, right now, this entire deleveraging of the economy is actually ordered by the highest office in China. So it's kind of self-inflicted, and if you were to really look at the entire bear market of the Hang Seng Index or a lot of all these big companies, this recession or quote-unquote bear market is really self-inflicted. Number 2, don't forget the difference in rules that the US market and the Chinese market abide by. The Chinese market is not subjected to all this political gridlock and stuff. And the regulators, the banks, the government, they're all one entity. They can crush an entire industry overnight. They can also resuscitate an entire industry overnight. So that's just a point to note. So lastly, I just wanted to focus and emphasize on this idea of a self-inflicted recession or self-inflicted bear market. So not too long ago, I think when I was just born, around 1997 to 1998, we do remember the Asian financial crisis. And the man that actually broke the Bank of England and essentially broke the entire Asian economies like Thai baht, rupiah, ringgit. Basically, when your fate lies on external stakeholders, when George Soros essentially tried to crash the entire Asian currency market, and he has an outstanding short position. So do you think he will give face to all the different governments out there, or do you think he will actually just spare you some thought and maybe just empathize with the government? Oh, you guys have been very sad. Let me be a little bit more kind. Maybe I just don't want to short that much anymore and maybe just give up some of my profits. Do you think that's what's going through in his thought process when he's trying to short the entire currency market? He doesn't give a F about all these different Asian markets. The more you guys crash, the best is you guys go to zero. And that's when his short position profit the most. And on top of that, he's on leverage as well. So the more you crash, the more he earns. And in this case, if you have to look at the entire dynamics of the relationship, this foreign force is extremely unfriendly and he just essentially just want to profit out of this entire crisis. On the flip side, if it's a self-inflicted recession, do you think the CCP is really out there to try to kill you guys and make you all go to zero? Just take some time to think about it. So these are just the 3 points I wanted to emphasize in this entire kerfuffle that's happening in China right now. So with that, what is China's Evergrande and could it default? So the company didn't say whether it will pay in cash or assets in terms of their debt obligation, and if it can't make good in 30 days, it will probably declare in default. So as we all know, last month on the 23rd of September, the company had an $83.5 million interest payment due, but they missed it, and they were given 1 month before this entire thing defaults. So right now, officials familiar with the discussions characterize this as getting ready for a possible storm. And the approach signals Beijing's reluctance to bail out the debt-saddled property developer while bracing to cushion any economic or social fallout. So recently there was this idea being toyed around saying that they will allow Evergrande to fall gracefully. I think that's a very apt discussion and a very apt description of how things will probably play out. I think somebody definitely will have to pay the price in this entire problem that they created. They're not going to let creators of this entire problem bail themselves out, give themselves huge bonuses like the Lehman Brothers crisis, and somebody's going to pay the price at the end of the day. I would be leaning towards allowing them to fall gracefully, yet at the same time try to save whatever there is and to prevent economic and social fallout. So next, I think the bigger problem is the contagion effect. When Evergrande falls, what is going to happen to all these different adjacent people or adjacent industries? Particularly their suppliers or their supporters, which might be similar property developers in that case. So right now, a Chinese luxury developer, Fantasia, also failed to repay $206 million US bond. And the notice of the missed payment took some market participants by some surprise. So Fantasia Holdings, a developer of luxury apartments in China, said it didn't make a $206 million US bond payment that was due on the 4th of October, adding to the problems surrounding the country's highly indebted property companies. So just days earlier, a representative told investors that it would make the payment. And they also said a company owned by its founder bought a small portion of the same bond issue after the developer noted that its operating performance is good with sufficient working capital and no liquidity issues. So recently, Fitch Ratings cut its rating on Fantasia by 4 notches to CCC-, reflecting an extremely high risk of default. And the global rating firm said that the developer recently missed another payment on a private bond. So they essentially cast doubts on the transparency of the company's financial disclosures. And they also note that there is no grace period for repayment. So unlike Evergrande with a 30-day grace period, Fantasia in this case didn't have any grace period. So essentially speaking, there are only 2 scenarios. So number 1, if you were to give the company the benefit of doubt, let's assume that whatever they claims to be is legitimately the underlying business performance. Let's assume that their operating performance is good, they have sufficient working capital, and there's no liquidity issues. They just decided to not pay up. Then in this case, I think a bigger, larger concern is why are they not paying up? I think a good argument for them is to really conserve capital and to insulate the entire business with more fluid and liquid cash in case that this contagion thing or in case that this Evergrande thing really is the demise of the company. Or secondly, they're essentially just outright lying about their entire underlying business fundamental. They do not have solid performance, they do not have sufficient working capital, and last but not least, they are essentially just illiquid, which is also why they can't pay up. And in this case, I think that Fitch Rating would believe that it's the second scenario where they do not have the ability and they are essentially having a very high risk of default. And as you can see, the bid price of the developer's bond is currently hovering at 24 cents to the dollar. And that's how much trust and the sentiment surrounding how much people can actually recover, which is dangerously low and it's quite worrisome, especially if you are the bond holder. So with that in mind, when compared to Evergrande, Fantasia is significantly smaller in size. Its sales for the first 9 months of 2021 is ranked 73rd among its domestic peers, while Evergrande was in 3rd place. So in our view, this is an issue of willingness to pay instead of ability to pay. So in this case, this is playing to the first scenario that I was explaining. And she also added that the company previously claimed to have enough cash to meet its October bond maturity and has met some of its other obligations. So there's this hint towards Fantasia trying to cherry pick who are they going to pay first and who are they going to pay next. Which is definitely bad for all the bondholders out there because ultimately you guys put up your money in good faith. So honestly, the company shouldn't have the ability to choose who they want to pay to, but it is what it is. And the company also said that its board and management will assess the potential impact of the non-payment on its financial condition and the cash position and provide update if there are further developments. So it also said that its shares would remain suspended from trading. So I think this entire idea of suspending shares from trading is a very classical China, or basically also a very classical Singapore move. So essentially, the regulators or the government wants to control speculation and manipulation in the markets, which is also why their classic move is to just suspend trading and disallow you from buying or selling all the underlying assets. So with that in mind, I'm also quite inclined into believing that it's in scenario 1 where Fantasia actually do have the ability to pay up, but they're just choosing not to because they want to reserve cash buffer and to insulate their business from all this contagion in fact. I will definitely be constantly providing you developments in this entire Evergrande issue because a lot of news media outlets and a lot of investors have been attributing the poor market to the China Evergrande issue. What else can they blame? China is the best punching bag, especially it fits into the entire narrative. But with that in mind, of course, I would like to clarify that, hey, there are merits and there are potential concerns in this entire China fallout, but I don't think at the back of the mind they want to bring down the US market with them. I think that's the least of their concern. They're really concerned about their own domestic markets in terms of the leverage in their own economy, and whatever foreign investors like to claim out to be all the conspiracy theory, they couldn't care less whether the US is performing well or not. As long as the Chinese economy is performing well, I think it works for them. So with that in mind, I'll see you in the next video, but more importantly, I'll see you on the moon. Goodbye!